Welcome to Talking Industrial Automation, a podcast where you get to know the people who make modern industrial automation possible. You will get to hear from CSIA system integrators and industry partners to get a better understanding of how they help their clients solve process challenges and how they've earned success in their careers. Along the way, we will touch on system integration best practices, technology, trends, and challenges. Whether you are a manufacturer, end user, supplier, or system integrator, you will enjoy the insights these industry professionals bring to this podcast. Let's get started. Hi, my name is Lisa Richter, the host of Talking Industrial Automation, a podcast where you get to know the people who make modern industrial automation and processing possible. In today's episode, we're talking industrial automation with Clint Bundy. Clint is managing director at Bundy Group, a boutique investment bank that spent the last 36 years focused on automation, control systems integration, industrial technology, IoT, and cybersecurity, closing more than 250 transactions along the way. Clint and his team work directly with founders, management teams, and shareholders to help them think through some pretty big decisions, whether that's selling a business, raising capital, or making an acquisition, and then actually executing on those transactions. Clint has also been a part of the CSIA community for several years, and in fact, he will be attending and presenting at the upcoming 2026 CSIA conference in May in Baltimore. Clint, welcome to the show.
Hey, Lisa, thanks for having me on today. I really appreciate it.
Of course, before I forget to ask you this question, what are you presenting at the conference?
Yeah, great question. We're going to be doing a panel. I believe it's on the Thursday of the event, although I'd ask any participants to double check your agenda. And it's going to be myself as a moderator, and then we're going to have three other panelists talking about M&A within the control system integration space. We've done this before. We've gotten a lot of great reviews. We usually pack the room. It's meant to be very collaborative. We all take questions at the end from the audience, which we'll always get a bunch of questions. So I hope you're going to CSI in Baltimore 1, and 2, I hope you'll come to that panel meeting.
And for those of you who may not know, M&A means mergers and acquisitions. Sorry if I'm being pedantic, but you just best to define terms up front, right? All right, so let's start at your kind of beginning here and let me understand how you came to be in this industry. Did this career choose you? Did you choose this career? Tell us the story.
Yeah, great question. It did really choose me, I guess, in a manner of speaking, because I grew up in the business. My father started our company back in 1989, so I was in middle school then. And for better or for worse, although I think better because fortunately the profession fits me and my interests, I had the opportunity early on to kind of watch my dad build and grow this business, this mergers and acquisitions advisory business. So I was going to buyer seller meetings in high school. I was working in business development with him for finding new clients. I was helping him in our potential client engagements and due diligence. So I was able to learn a whole lot during those formative years for me. And then I did have out of college, I guess, doing what a lot of children do. They who come from family businesses, they tried a different path for a little bit just to see the world. And I had the opportunity to work at corporate finance for Accenture, which is a technology and consulting company. I worked in a startup business after that, and then went to business school. But really around business school is about the time frame I realized, I really do want to go back and work in M&A advisory, work with my father. Thought I would do it right after business school, but actually worked in a larger corporate investment bank for a couple years before then coming back to Bundy, then Bundy and Company, now Bundy Group in 2008.
I think what's interesting about this arc is that you are often or sometimes work with family businesses yourself. I think there's system integrators in particular. There's a strong contingent of family businesses in the industry. And so you've got that additional expertise of kind of understanding that there's special dynamics that happen in family businesses, particularly when it comes to succession planning. There's a lot you need to be thinking about and keeping your ears and eyes open to kind of take the temperature of the room. That would be my guess.
You're absolutely correct. I come from a family business and we advise a lot of family businesses. And so it really kind of gives me the opportunity to kind of speak from a few different vantage points. I can often relate to the owners who are working together as a family and exploring options. So you hit the nail on the head with that comment, Lisa.
Yeah, yeah. So if you're out and about, maybe at the grocery store, and you run into somebody and you're having a little chit chat, how do you explain to just your average person what it is that you do?
Yeah, it's funny because the term investment banking is actually an incredibly misleading term. It's why I'm oftentimes careful how often I say claim I'm an investment banker because we don't really do any investing and we don't really do any banking. So really, what we are is we're advisors at heart. Our company's mission statement is to empower a business owner to realize the full potential of their life's work. And to just go a layer deeper, what we do is we specialize in representing business owners and companies in a business sale, which I usually categorize as some kind of change of control event where they're selling 51% or more of the company. And we also work with them in raising capital. So ultimately, when a company hires us, there are really two main objectives we're trying to do for them. And that's one, to help them maximize their value in a transaction event. And two, and it is help them find the best fit, partner fit, buyer fit, fit that is going to be there for the good fit for the company in the longer term after that transaction closes. So, we're there ultimately to advise the owner. We're there to provide information to the owner. We're there to provide options, usually in the form of a competitive process where we're bringing a bunch of different options to bear that we manage the process with, again, the end goal being to help them maximize value and fit. So, hopefully that kind of gives you a little more of a streamlined view of what investment banking or M&A advisory is.
Yeah. Yeah. So you mentioned that your dad started the business in 1989, I believe you said. But since then, how give me a little bit more history about the Bundy Group and how it evolved over time.
Yeah, it's an interesting story. I think as all entrepreneur stories are with my father. He was in a prior life an employee and labor relations consultant, so working with a lot of companies on those matters. But when he was in those client engagements, he ended up working with owners on exit planning topics. So just the topic would come up again and again and again. And one day he'd always wanted to be in business for himself. And one day he read an article in USA Today about M&A advisory and looked at my mom and said, "Well, that's what I want to do." So actually, the guy who wrote the article, he hired him to help him set up. Then we were Bundy and Company, now Bundy Group, and kind of off to the races he went. So this was it was a different time for the M&A market. And it was the M&A markets evolved a lot, and so has our firm. But at the time, my father, back in the '90s and the early 2000s, he was and his team were cutting their teeth on selling smaller manufacturing companies and industrial companies, retail firms. A lot of these being, founder-owned businesses. This is again a very different time in the M&A market where a lot of these owners weren't even aware there was the ability to sell their company. So my father's job was to help find a buyer, buyers to come in and acquire those firms. And so how it evolved over time though is we've added talent to our team. We were more regionally focused back in the 90s, more kind of southeastern based focus, Mid-Atlantic. Now we're a national firm. We just used to have team members in Roanoke, Virginia. Now we have team members throughout the country. We became more industry specialists too, which is a topic we can get into in a bit if you'd like. But yeah, really, we've grown some in terms of our sweet spot of client profile that we work with, not only from an industry specialization, but probably working with a little bit larger firm on average than we did back in the '90s.
Yeah, so let's dig a little deeper into that, the kinds of companies that you, I guess, specialize isn't really the right word, but kind of your sweet spot, would you say?
Right. We have three main, what I call industries we work in, which are business and industrial services, technology enabled services, and healthcare. But within those three larger industries, we've got some sub verticals we spend a lot of time in. And so we're on a system integrator focused podcast here. So I'm just going to keep it focused today on one that we know well and we love and have been active in for 15 years, which is automation and industrial technology. with a whole lot of time spent in the system integration space. And so, we got involved. I've got to go back and look. I think my first CSI conference was St. Pete, which I think was 2012, if I'm not mistaken. So we've been active in that in the CSI community for a long time, and how we kind of got involved in the automation space was even before that year, back in about 2010, where we kind of stumbled, if you want to know the honest truth, in the automation space through one engagement. And we networked from there and realized, wow, this is a great space. And so from a specialization standpoint, I think if you want to be in my industry and you want to be a specialist, you have to kind of really embed yourself in the industry. You've got to network a lot. You've got to be involved in a CSIA type organization. You've got to become a thought leader. You become a thought leader by staying on top of trends, having a lot of conversations. And so it's been really exciting for us. Unfortunately, I guess it's better to be lucky than good. We picked a great industry to get involved with back in the 2010s, 2011s.
Yeah. So you stumbled into it, you mean? I think I heard like you stumbled, but you stumbled into it. Yeah.
It did back in 2010, one
Okay.
engagement. It was actually we got referred into a company that we actually ended up selling later on, a company called Dorset Controls. And I'll tell you why I remember it is because this was, if you remember, 2010 was a great financial recession. The economy was doing terrible. So just about every set of financials we were looking at, the numbers on just about every company we saw were going down. But one day we got contacted by Tom Dorsett, and he had a company that was a system integration and SCADA software and hardware firm, and he sent over his financials because he was thinking about an exit, and it was the first numbers I'd probably seen in 6 months that they were actually going up, and so I instantly said, "Well, first, looks like a good company. Second, we maybe need to learn more about this industry."
Yes. And you've done that. Let me ask you a question. If you are a system integrator, would you like to talk to other system integrators about the challenges you're facing? If so, I have good news for you because that's exactly what happens at the CSIA conference. This is where SIs share their knowledge with other SIs. This is the only event in the world where you'll get peer driven strategies on everything from AI adoption to team retention and thriving in uncertain times, all from SI owners and executives who've been in your shoes. This year also features two can't miss workshops: the CSIA Marketing Workshop, where SI marketers share real stories and real results, and the CSIA Best Practices Workshop, which is packed with insights to optimize your operations and deliver exceptional results. Plus, you'll hear from Dan Heath, #1 New York Times bestselling author, on his latest book, Reset: How to Change What's Not Working. Whether you are looking to sharpen your skills, expand your network, or stay ahead of industry trends, the CSIA 2026 conference, May 4th through 8th in Baltimore, is the place to be for you and your team. Explore it all at www.controlsys.org/2026 conference. See you in Baltimore. Let's look a little bit ahead. Like, what do you see for the next 12 to 24 months other than attending the conference, of course? What else do you see coming up?
Well, I'll answer it in twofold if this helps. I'll talk from a Bundy Group perspective, and then I could talk a little bit more about the automation system integration space. From a Bundy Group standpoint, we've got we've been very fortunate. We've got a great team in place. We've got a team of about 12 professionals who we are focused in servicing our privately held company clients. So at any given point in time, we are working on, it could be anywhere from 5 to 15 live engagements. Plus, we've got a whole lot of other companies that we're probably in process of talking to about preparing to take them to market and engagement. So I spend a lot of my week and days talking to owners, giving them advice about timing on when they're ready to go to market and better understanding their objectives. So for us, over the next 12 to 24 months, everything we can see from what we see today is that the market's fertile for M&A, and the buyer activity is strong. So we do expect it to be a strong year for our firm, and we'll be looking to add more talent to continue to help service our clients. And then so we're very excited from a company standpoint, from a market standpoint, and this is part of what we'll be talking about at CSI in May. It's been interesting for me that the evolution of the control system integration M&A market is when I came into this market in 2000, let's call it 12, there was a fair amount of M&A activity. I wouldn't say it was very overwhelming, but there were options for owners back then. Now you have a very robust level of M&A activity, a lot of what we call strategic buyers, and a lot of what we call financial sponsor buyers who are very, very active in the automation and control system integration market. And so we don't see those trends and that M&A activity letting up at all in 2026 and beyond. Now, my crystal ball admittedly is no better than anybody else's, but where we sit today, the momentum is as strong as we've ever seen it, which is frankly very positive for the business owners and companies out there.
So, explain a little bit to me about the difference between these two buckets that you mentioned. There's the strategic acquisitions, I think you said, and then there was another term that you used, but I think you meant private equity, I think is another term that's a little bit more common to me. So, describe those two different types of those two different buckets, I guess.
Yeah, yeah, great question, an important question. So, and I have no doubt the owners who are listening to this today, I mean, they probably are fielding anywhere from 5 to 50 emails and phone calls a week from buying entities, and there are these two main pools of buyers. Financial sponsor, which Lisa, you're right. You can use the word private equity as well. We use the word financial sponsor because it encompasses more than just traditional private equity. Because now for instance, you've got family offices, which are effectively private equity groups, but are backed oftentimes by one very wealthy family
Mm.
or maybe one or two. So I kind of use financial sponsor as an all-encompassing term. Private equity is fine to use though as well. Private equity or family offices, those are investment funds set up to acquire privately held companies. Effectively, they're backing the companies and the management teams. They often always don't want to buy 100% of a company. They want to buy a majority ownership percentage, but leave the management team and or the prior owners with a minority percentage. And then what they want to do is grow those companies over a period of, let's call it 3 to 7 years, and then turn around and sell the companies again. And that's how they generate a return for their investors or their what we call limited partners. And so certainly Lisa, I know you're very well aware of this. There has been a tremendous amount of financial sponsor activity in the control system integration space over the past really decade. And those initial investments they do, we call those a platform investment. So a name that a lot of people know in the system integration space as an example is eTech. eTech, which I knew the company before I ever received any financial sponsor capital, was acquired by one financial sponsor, which is Falfurious. And then about a year ago, it was sold from one private equity group to another, which is Graham Partners. And during that time frame, they've done a lot of what we call add-on acquisitions over the years. So eTech's acquired a lot of other, usually smaller integrators, like a Superior Controls as an example that they acquired. So that's one. And then the other is a strategic. And a strategic buyer is really an operating company. It's an industry company. It could be backed by a financial sponsor. So really, at the end of the day, an eTech is a strategic, even though it's backed by a financial sponsor. But another one is a Vinci Energies, who we just sold a company to. Vinci is a publicly traded conglomerate headquartered out of Europe. You could also have ESOP industry players that are in the market. And so for owners, the good news is that, again, the evolution in the automation system integration market is now a tremendous number of both strategic and financial sponsor buyers out there, which are good because where you have options for owners, that gives them choices. It also, frankly, helps their valuation on their company,
Yeah.
assuming they run a competitive process to achieve that valuation.
Yeah. Vinci, I know the name, the brand I'm more familiar with is Actemium.
Mhm.
I don't know what the relationship is between Vinci and Actemium, but often when I see acquisitions by that company, they've tacked on Actemium or changed it to Actemium. So that puts it in context for me as well, keeping it straight in my head. You're right. Keeping track of all of it has been, exciting and challenging at the same time. I mean, if you had to put any kind of like numbers or try to like, I don't know, quantify what you've seen over the past couple years in terms of the consolidation of the market, is there any way in your head that you think of it like it's consolidated 50% or it went from an X number kind of companies down to like, is there any way you quantify it in your head?
Yeah, I'm gonna use baseball analogy if that's
Okay.
helpful. Let's say there's a 9-inning baseball game from an M&A activity and consolidation standpoint, and let's say if inning 1 is basically the game's just started, consolidations just started happening, and then inning 9 is we're pretty much done. There's very
Yeah.
little, if any, other consolidation to happen. I would say, we are probably somewhere in inning probably 4 of a 9-inning game, and that may not be that late. It may even be more like inning 3. I mean, we've been tracking now, and we've given this data to CSIA for the end of the year. I believe it's the GSIR piece. We also do a monthly in Control Engineering magazine where we show a number of automation deals that are completed. So you can see that the trends over the years have been a continued robust level of consolidation. And just when you think, oh, it's going to probably start to taper off, no, it's not. It's picking up. And I'm talking with and part of my job is just be talking with a lot of owners who are still probably owned, who are thinking either tomorrow or 5 years from now or 2 years from now about a potential transaction event or sale, and there's still a lot of them out there,
Yeah.
a whole lot of them, and part of that is just automation's a growing market. So each
Yeah.
year you have a lot of new companies that come online, and before you know it, 3 years later, they're 10 or 15 or 20 million in revenue or more and growing at a great clip. So
Yeah.
that's exciting for me to watch.
Yeah, that brings up my next question, I guess. If you're thinking about companies, is there a certain level you have to be before somebody would be interested in acquiring you? I honestly don't know. I mean, I imagine a 1 to 2 person company, maybe not, but at what point do they start to become attractive, I guess?
A very good question. I know I keep
Yeah.
saying very good question, but these are all
Yeah.
good questions, Lisa. And there, to answer the short answer is no, there's not a magic minimum number. But let me give a but to that. But the larger you are, and I'm going to give you my 4 pillars of value here that we talk to owners about, but the larger you are, then the more options you have.
Mm.
So my kind of 4 big, what I call value drivers that I spend a lot of time talking on panels about to owners and talking in one-on-one conversations is building stability, profitability, growth, and scale. And stability, ideally, a good system integrator has a lot of repeatable client work, multi-year project work. There's just some repeatability in the revenue, and the revenue doesn't look like a roller coaster. Profitability, and we look at in terms of adjusted EBITDA, earnings before interest, expense, taxes, depreciation, amortization, which that's one of these topics that we could do a separate podcast on. If an owner ever wanted to reach out to me on for more information on that, they're always happy to. But that's really at the end of the day, the operating cash flow that a business generates. So we look for certain mile markers on that. Growth, do they have a history of past growth? Plus, can the owner or the management team talk about future growth opportunities? That's very important because a buyer at the end of the day is buying the future, not the past. And then the fourth, which you're really asking about, is scale. And I would say that a 2-person integration firm is going to have a lot less options, maybe no options, versus say a 40-person integration firm doing 15 million in revenue. So I would say just loosely, we would like to see a system integration firm probably get at least a couple million in revenue to really get on the map. Because then at that point, you're really an really decent to good what we call an add-on acquisition candidate for a strategic buyer. And then as you get larger, you could be even a platform investment candidate for a financial sponsor. But at that point, you're probably 20 plus million in revenue to really
Yeah.
be a legitimate platform candidate.
Yeah. So, in my mind, I think of a strategic buyer, somebody maybe who's like maybe weak in a certain area, so they buy another system integration company that's strong in that area, like maybe life sciences, or maybe it's a regional thing. Would that be?
That's a good way to think about it. I mean, if you were to line up 40 strategic buyers, just 40 random strategics, you're going to have 40 different
Mm,
acquisition strategies. Now, there'll be some real overlap,
mhm.
but first, a lot of times they're looking to acquire for industries and clients, and they're looking to acquire for talent. I mean, at least I know CSI is on the front lines of this, talking about the talent issue
Mhm.
that is out there in the CSI community or lack thereof.
Yeah,
And so it's not uncommon for when we're representing a company in a sale for us to make sure we feature and highlight the bench of talent that our
yeah,
clients have, because that is a big value driver that can help and frankly obtaining a premium value for our client in a
yeah.
sale.
That's interesting because inherent in the company being sold is a risk that the employees will get skittish, I would imagine.
They absolutely can because in general, employees are anti-change,
Yeah.
and that's in just about any company. But I'll have to say that, and there's kind of I think it's a misnomer, but there's this sort of theory. Oh, well, buyer likes to come in and fire everybody to cut
Mhm.
costs. Well, I could tell you, I have been in this business over 20 years now, and I've only seen that in times where a company's distressed, and we don't really
Yeah.
work on with distressed companies, but actually, most, if not all, clients of ours that we talk to a year or two after close, it goes the other direction, which is the buyer is looking for ways to add new talent, to add new clients, and that's
Yeah.
how they build more value. I mean, all buyers are in the business of how do I, if I'm acquiring a company that's doing 20 million in revenue, how do we find a way to grow it to 40 million in revenue and increase the margins? Well, first and foremost, in this industry, you've got to add talent to do that.
Yeah.
And we actually, so I very rarely, if ever, see him being a
Mm.
negative for the employees. Actually,
Yeah.
it's almost always a positive for the employees.
Yeah. Interesting.
Let me ask you a question. Don't get mad. How many people in your life truly understand what it is that you do? I'm willing to guess the answer is not too many. I get it. So many of us toil in anonymity. But what if I told you that I have a place where you can go to meet and talk and commiserate with people who do understand what you do because they do the same thing? Amazing, I know. But that's really the bottom line what CSIA is all about. And recently, we've expanded our learning and networking opportunities to help you find your people. We are calling them special interest groups. These groups are aligned around topics such as emerging leaders or marketing, and they meet virtually throughout the year with some plans for meeting in person as well, probably in conjunction with the CSIA annual conference. We will be bringing more online throughout the year, but for now, if either of those topics sound interesting, go to www.controlsys.org/events to check out what we have lined up. Full disclosure, you do need to be a member of CSIA to join the Marketing SIG, but the Emerging Leaders one is open to anyone who wants to give it a try. So why not take a minute and check out the upcoming schedule at www.controlsys.org/events. Your people are waiting.
All right, so tell me a little bit more about what makes Bundy Group unique in terms of how you approach a client engagement.
Yeah, we are, 36 years in business and over 15 in the automation and control system integration space. We've got a lot of specialization and experience. You can't there's no substitute for experience, and we've got a lot of it. That's working with a lot of owners in a lot of different situations, which, when you've worked on one situation in some ways or shape or form, you're going to see a variation of that same situation or dynamic in the future. So we're just better prepared to address questions from clients, better prepared to position, because we're in the story business at the end of the day for our clients. We're there to tell their story to help maximize value and fit for them. And so the experience for us is the first and foremost. We also have a very senior team. At the risk of being blunt, we don't have the 23-year-old analysts running our client engagements. We have a team of senior professionals, a number of whom were, before joining us, were either in larger investment banks or were working in more operational roles. For instance, I've got two of our principal managers on our team who were former CFOs with technology services oriented companies. Well, that's a tremendous amount of experience because they can relate to our clients because they were kind of in those seats before. And so, we've got a very roll up the sleeves approach. Our team is very much the mentality of if the client wants to talk Friday night at 10 o'clock because they're nervous about an upcoming offer deadline, then we're going to take that call. We're not going to say, no, we'll talk Monday morning. And then, finally, I think it's an important one for our clients as we're, again, trying to get them the best outcome is that we've got a very recurring base of conversations going with the buyers who are active in the automation and system integration markets. A lot of times those buyers are reaching out to us on a weekly or monthly basis asking, hey, who are you working with? We're dying to get another acquisition done. And so we know who's most aggressive. We know, frankly, who we could probably push the furthest in a certain engagement, who's going to be the most interested when we take a company to market. And the buyers in the space know that if they're not going to get aggressive and play fair and play honest in an engagement we show them, then we're probably just not going to show them any more engagements in the future. So they've got a real vested interest to show well on our engagements.
Yeah. So you're part therapist, I guess, is what you said. That's what I took from that. You're part therapist, understandably. And also, I'm curious about, do you mostly have buyers coming to you? Do you mostly have sellers coming to you? Is it kind of a mixture?
Our fiduciary is to the seller. When we represent an owner in a sale, our job is to get them the best outcome. So I'm in any given point in time, I'm speaking on a weekly or monthly basis to numerous owners in the automation and system integration space, many of whom, frankly, I've known for a lot of years. But because of and again, thanks to CSI for giving us a good ecosystem for that networking. But we are also at the same time having a lot of conversations with the buyers. That's part of our job is to really get a lot of proprietary information, going beyond what an owner could do on their own through a chat GBT search or a Google search. It's our job to really know their playbook and know them well. But our fiduciary is to the owner and who is the selling entity.
Yeah. That's an important distinction, I think. Okay, so why don't you give me an example? Tell me or give me an example of how you like maybe close a transaction and it went well and
Yeah, I like it. We're in the story business, so I like the
yeah.
story question. Well, actually, I'll just use one that we just closed recently. We are actually at the closing dinner in St. Louis just last week. Myself and Jordan Frickel, who is the principal manager for our team that ran the deal. The client was a company called Lang Tech, which is a CSI member. So it's Stephen, Linda Hanlon were the owners, and they have built up a very good company, had a very good management team in place. I've known Steve and Linda for a number of years through CSIA meetings. We'd also seen them and met with them at Rockwell Automation Fair and some other conferences. And Steve reached out to me one day and just said, "Hey, I think it's had time for us. We need to really start thinking more seriously about, giving us an exit option out and finding a good new partner for the management team. I've got a really sharp young management team, and so." We spent some time doing our own assessment on the company, giving thoughts to Steve and Linda on what we thought the potential valuation ranges could be, what the potential options could be. We're kind of a measure twice and cut once kind of group before we even have a client sign an engagement letter. So I think that matched well with Steve and Linda and how they do business. And so we were engaged. We ran a process that took roughly, let's call it 6 to 8 months. We had when I talk about process, I'm talking about that competitive process where we're bringing buyers in. We control the process. We have them sign non-disclosure agreements. We generate initial offers, which we call indications of interest. Then Steve and Linda picked who they wanted to continue conversations with. And then we did that in what we call the management meeting rounds in St. Louis, followed by what we call a letter of intent date, where we have formal offers come in the door. And we had a lot of offers come in because they have built a very good company, and we had the good fortune to be able to tell the right story and drive the right process. And ultimately, it landed where Steve and Linda selected a financial sponsor-backed platform called SJE, which I believe is involved with CSIA, and we closed a deal with SJE, and which ended up being a great experience for Steve and Linda and us. And we're proud to say that it was a great outcome, including on the financial front, which far surpassed the original value expectations that Steve, Linda, and the Bundy Group team talked about. So, we're, I think, about 8 months past now, and we've received nothing but positive reviews from the management team and Steve and Linda about how things are going. So that's just one. I can give you 20 more stories if you want,
Yeah.
Lisa, but that's one, hopefully, for you.
That must be just super rewarding to be able to, like, close that deal and, like, hand them that big fat check. Yeah, that must feel pretty good.
It is great, but
Yeah,
I will say, my father, who founded our company, is very much a relationship-oriented person, and he had said this for years, and the older I get, the more I agree with it, is, at the end of the day, after a client engagement's over, do you remember the transaction value? Sometimes you do, sometimes you don't, but what you don't ever forget is the people. You don't
yeah,
forget the client. You don't forget the experience with the client. I mean, I got a beautiful email from Steve and Linda just the other day about Bundy Group and our work and Jordan's work on the engagement. And that to me is what really I will probably remember 10, 15, 20 years from
yeah,
now. So yes, we do have a very rewarding business. A lot of work goes into getting to that end result,
yeah,
but it feels great once you get to the top of the mountain with the client.
yeah, 100%. Alright, so what advice would you give to a business owner who's maybe thinking about a sale now or in the future? What would you tell them?
That one's easy. Plan for an exit, build value, and plan for an exit. Even if you don't plan on exiting, you need to always be focused on building value in your company because for many owners, it is the most valuable asset they have. And I'll give CSI a big props. You all have done a great job over the past decade of pushing this topic, of offering resources to your member base, like the lessons from a hot stove sessions and what have you, where getting back to those fundamentals of building stable, profitable, growing companies with scale. And it's a difference maker for these companies, for the owners who are proactive in taking those actions. And I have seen over the past decade, owners who a lot of these are engineering oriented owners developed a much more sophisticated business acumen. And frankly, that's great for them. And then the day they hopefully call me, it gives me something to work with where I can drive a much better outcome for their benefit.
Yeah. Just to be clear, the lessons from a hot stove is like a session that we typically have during the conference. That's what you're referencing to. And it's basically where business owners get up there and talk about a time they maybe stumbled or did something or they had a challenge and how they solved it. We always make sure there's a good resolution, a good ending. But it's a very unique opportunity for people to hear the real deal, which you just don't really get that much from people. It's a very unique setup there. So okay, so let's talk about challenges. What are some of the challenges your customers are facing right now?
The number one is easy, which is talent.
Mm,
It's easily the number one issue that probably for years now I've had owners tell me, which is, Clint, I can grow as much as I want to grow. I've got more demand from clients.
mhm,
I know what to do it. I just got to find the people to do the work.
yeah,
The really good companies have found at least a system
mhm,
for recruiting and training talent. Doesn't mean they still don't have challenges, but the good ones have found put a good system in place. I'd probably just say the second challenge that I see is, in this day and time and is, you all have Alex Chelsovsky, who's an economics partner for Bundy Group as well, talking about the geopolitical, macroeconomic headwinds out there. That creates concerned about the future just in terms of predicting the future. And so, that's certainly, we hear even though I'm not seeing it impacting the profit and loss statements for our clients, but I hear a lot of owners talking about it and talking about it
yeah,
with us. And that can impact, for instance, capital expenditures for their clients, which then trickle down to them. So those are probably our two biggest things we see.
yeah, understandable. What kinds of trends and challenges are you seeing in industrial automation?
Well, it's a growth market, and I was bullish on it 15 years ago, and I'm even more bullish on it today. The industry and markets out there, whether you're talking about life sciences, food and beverage, uh, data centers, there's absolutely an enormous demand for and trend towards automation, robotics. Of course, now we got the AI influence that's coming in on these topics, and so the system integrators are on the front lines of these solutions, of these markets, which is they're oftentimes their clients are looking and saying, "Hey, I know I need to do this, but what do I do? How do I do it?" And this is where the system integrators, they're mission critical in helping execute on these projects and giving great advice. So we're very bullish on it, medium and long term. There always could be, short term headwinds, the talent issue we've certainly talked about, geopolitical we've talked about, but our expectation is 15 years from now, I'm going to be sitting around saying, I'm still very bullish on the automation market, and we've had a great past 15 years.
Yeah. I was just looking at the Easy Stats, which is a short little survey we do for our members once a month. And one of the questions we always ask is how their outlook is, whether it's positive or negative. It's a binary question. 90% said positive in the January statistics. So clearly the optimism is out there somewhere. But what makes you optimistic about the future of the automation industry?
I think it just boils down to the fact that we are in a business world today where it's with the boomer generation retiring, with talent difficult to find, uh, that there is no choice but to find automation solutions and robotic solutions and AI solutions to match the need. And so it's mission critical. And for me, I feel like that's going to be a tailwind that's there for a long time.
All right, we're going to switch directions a little bit and talk about why Bundy Group became a member of CSIA.
Yeah, it's funny, and I didn't get their approval before to say their names, so I'm not. But it would be two different owners of system integration firms who were very, very involved in CSI and have
Mhm.
been for years. So one who's based in the Southeast, I met him probably in about 2010 when I was working on the Dorset engagement, and so it's an owner, very again been a chairman and what have you. And he said, he was the one who said, you if you want to be serious about this industry, you need to get involved with CSIA. And I, of course, had to go home and Google CSIA and figure out what that was. And of course, one long thereafter that I went to the first conference, and then when I went to the when I went to St. Pete, and again, I wish I remember the hotel there in St. Pete, that St. Pete conference. It was much smaller back then than the CSIA conference now. You're a very different conference, which is a tribute to the CSIA team. But the other owner I met, who again probably everybody in this podcast knows, he looked at me and goes, "Clint, you got to keep coming every year, and you got to keep networking because this group respects anybody who keeps showing up and keeps a smile on their face and keeps sharing information." And those two people, I every time I see them, I remind them both, "Hey, you're the one that got me into this," and the other one I say, "You're the one that motivated me to keep going." And so it's been one of the best business moves I've ever made, being involved with CSI, and we love being a part of it.
Just based on your impression that you did of the second person, I have an idea in my head who it was.
I I
Which
I, I have no doubt you know them well.
Oh, that's so cute. Okay. So now we're gonna talk a little bit more about you professionally and what I would like you, if you're willing to share, give me an example of maybe a mistake that you made and what you learned from it.
I don't. I guess I'd call it a mistake, or maybe it's just if I could go back and do it over again, I would have specialized even earlier than we did. I mean, the topic of specialization, industry specialization, was one that my father and I were talking about probably back even in the '90s or late '90s. Um, but at that time, most M&A firms, including our firm, was more what we like to call a generalist, where we could be selling a manufacturing firm one day, and we could be selling a business services firm the next, and then a technology company the next. And back in the '90s, that was very common. But really, what you saw in the M&A market and with M&A advisory firms is as the market evolved, firms became more of a specialist. Not all firms. Some firms who even call integrators today, they kind of maybe try to sound like specialists, but they really aren't. So if I could go back to myself when if I was probably 25 years ago, I'd say you should have not gotten involved with CSA and the automation community in 2012. You should have gotten involved with it in 2006. Is what I would advise. And I'm a believer, and I would say this to anybody young in their career: your your net worth is equal to your network and your knowledge base, and so it's never early enough to build on that.
Well, that's it for today's episode of Talking Industrial Automation. If you're interested in learning more about Clint or the Bundy Group, you can find them on the CSIA Industrial Automation Exchange at www.csiexchange.com. Thanks for listening, and thank you, Clint, for joining me today.
Thanks much.
If you enjoy this podcast, please subscribe wherever you listen to podcasts. You can also really help the show by leaving a review and sharing with colleagues. We're all just slaves to the logarithm now, so I gotta ask. Thanks for listening to the Talking Industrial Automation podcast. Thanks also to bensound.com and Wistia for the music bumpers. Until next time.